Welcome to this episode of Find Your Edge, where we take the opportunity to shine a spotlight on the journey of our trusted partners, where we can highlight their expertise for you and as well share their journey within the real estate industry. Today, we are joined by our trusted partner and good friend, Keith Uthe of Enrich Mortgage Group. And Keith is both a real estate investor and an entrepreneur who has built a significant reputation from his expertise as an investor-focused mortgage broker and, of course, an industry leader. Keith, welcome to Find Your Edge.
Hey, thank you, Patrick. I appreciate the opportunity to be here and have this, low cast but high level discussion.
Beautiful. So, Keith, I want to start, as I often do with my podcasts, is that your bio says a lot, but we'd like to hear it from you. So why don't we start kind of from the beginning? And you're not only a mortgage broker, you are a real estate investor. But where did you start in the business of investing in real estate? And then how did that transpire into you becoming a top performing mortgage broker and starting that business?
Yeah, so our real estate investing journey began without us thinking that that's what it was, because our first investment property that we purchased was a property for my mother-in-law to live in back in 2003 for the purpose of her having controlled rent. But we didn't see it as an investment property because we were buying it for our mother-in-law. And so different mindset around something that we've learned from you over the past 13 years about treating it like a business. We didn't see it as a business at that time because it was for our mother-in-law to live in, or for my mother-in-law to live in. And so, so that was the first investment property we purchased, but never really thought of it in the concept of it being an investment property per se. And so from there, over the next couple of years, we started to think more about real estate investing. Went to some different presentations. Robert Allen was doing a lot of promotion and stuff around Calgary because of the way the market was and other different investments. Mm-hmm. I picked up the Smith Maneuver book during that time. We learned about flips. And so the next thing we did was actually try a flip in 2005, 2006 to 2007. And yes, because of that length of time that you see, we went through a lot, including Nancy getting pregnant. Doing a flip while your wife is pregnant is not something I recommend.
Not recommended.
Don't recommend it. We made it through it. We didn't make any money on it. We probably, in fact, lost some money. I tell you, though, we learned a lot. Also realized that doing flips was not something that we wanted to do in real estate investing. So then from there, we progressed in 2007 into our buy and holds. And so that's when we started buying buy and holds, got into JV, brought in JV partners, one of which we still have to this day. It's been 17 years. Another one we just exited last year after 16 years. And so we use JVs as where we start some of that next steps. We bought another property on our own. And then in 2009, bought another one. 2012 another, and 2014 another, and 2015 another. So we accumulated and
just kept trucking away. I think the key I just want to shine a light on that you just kept taking steps, taking steps, and
there was gaps
and growing.
And there was gaps in there, we had, we bought 3 properties in 2007 because things aligned and we were able to. Then we didn't do anything for 2 years. In 2009, we bought another one. Then we had a 3-year gap. 2012, we bought another one. So I think one of the things that I've learned through that is you don't have to rush to make. Some people get in a big rush sometimes you just be patient for looking for the right opportunities. And that's when those opportunities came up. And so, but in 2011 is when we met you and we met Rain, and that changed our perspective because we had kind of stalled after 2009 and we weren't sure, kind of some of the things that we were missing in our real estate investing business. And Rain really took our education to another level. and I've told you this story before, but I'll tell the others. The first presentation that we ever heard out of Rain at our first acre was you talking about treating your real estate investing like a business. And that presentation created the biggest aha moment ever in our real estate investing business for Nancy and I. We credit you with that to this day, and will forever, because to me that is a presentation that everyone needs to hear, probably more than once, to get it through their skull that they've got to stop treating it emotionally and start treating it like a business. And
It's funny.
really,
Sorry to interrupt, but it's funny you mentioned that, Keith, because I was recently at an event where I presented, and I actually was asked to present that particular segment called "Treating Your Real Estate Investing Like a Business." And there was a longtime Rain member in the audience, like you. And Dave came up to me afterwards and he says, "You know something, Patrick? Over all these years, I've probably heard that presentation 10 times at least." And he goes, "Every time I hear it, I pick something else up that really matters to what I'm doing with my real estate portfolio." And what's interesting about that is he's quite successful in his real estate investing. He's built a very, very significant portfolio and is actually in the business of investing in real estate, doing different strategies, et cetera, has a team of people. But yet there's somebody with that much experience can listen to it for the 10th time and still pick something up. So it is really an interesting perspective when you treat your real estate investing like a business. So thanks for sharing that story, because again, it's not just you that experiences that. It's like many have made those comments. So it's just, I find it interesting in that dynamic. So anyways,
yeah,
carry on. You
yeah,
treated it like a business and it changed for you.
it changed for us, and it's just such a place of mindset for a shift. But the other piece that along the way of this, of then joining Rain and listening to all the different presentations, learning about you know financing even deeper than what we had already done and what we had learned with what we had financed in our own properties, experience we had in our own financing. When Nancy and I bought our first home, our first place together, and then we were moving up 3 years later to another one, and we had this little roadblock at the bank. That we went to a bank, didn't know any different at the time. Went to a bank, and we're talking to a assistant manager at the bank who was our advisor at the time, and she's like, "Well, your debt servicing's off," and she was explaining why, and I'm like, and it was because we had a credit card that had $5,000 on it, and we also had an open personal line of credit that had zero on it. And she's like, "Well, I have to debt service both of them." And I'm like, "But we don't know anything." She's like, "Well, that's just how we do it." I'm like, "But if the credit card has a zero balance, do you have to debt service it?" She's like, "No." I said, "Well, what happens if we pay off the credit card with the line of credit? And since you have to debt service the line of credit anyways, if the 5,000 is there, it doesn't matter." She's like, "Oh, let me see if that works." So she did it and it worked. And we were approved. So that was kind of my first, when I look back, that was kind of my first inkling that, hey, I've got some talent around this maybe, but I didn't dive into it or explore it. I used it for building our real estate portfolio. And then in 2014, I was offered an opportunity to transition from what I was doing as a job into something that I felt I had passion for, as an underwriter at a private lender. And through that, um, I was able to then take that opportunity and turn it into what I have as a mortgage broker now. I was, the market wasn't good at the time. I got let go, and I was introduced to my current brokerage owner at the time, and he was like, "You can." He's like, "You're." They both said, You're built for this. You're built for this." Like, and so I was able to. I really hit the ground running with my ability to have conversations with people around mortgages, around real estate investing, because of the experience that I had in real estate investing, what I learned as the underwriter, and then with the information that I gathered and soaked in going to RAIN meetings, and just leveraging all that to build my ability to share knowledge and information, so people knew that they could trust me, and that I knew what I was talking about, and that I had their best interest at heart, so that they could be successful as a real estate investor as well.
Well, you make a number of great points here. And so I'm assuming that that is really what influenced you as a mortgage broker to get and stay investor focused. Now, it's interesting about that is that within the industry, there's lots of mortgage brokers out there who do a great job of refinancing or financing for somebody buying a home. My question for you is that real estate investing is often not just straightforward. It gets a little convoluted. It gets, deals come across your desk with lots of hair on them. They're a little bit confusing. They're harder work. But why do you stay in the space? And I know you do it all, but you really are focused on real estate investors. What keeps you there as opposed to doing those simpler deals where you're working with a homeowner and all the things that homeowners do, which banks have a tendency to approve them much easier than they approve a real estate investor. So I'm just curious as to what your mindset is around approaching that particular demographic.
Yeah, so I think twofold. So one, I'm a Smith Maneuver certified professional, and so having done that myself, having set that up myself back in '05, and seeing the power and influence that it provided us through using it in investing in real estate ourselves. So I think that's one big piece of it, is that I want to help people to be able to use the Smith Maneuver strategy, whether it's through real estate investing or other investing, to help them build wealth and pay less tax to the government, which I think is something that most people want to do. And so there was that piece of it. But the other side of that is, my personal vision is all people are living a life of opportunity. Well, that drives into working with people of different needs and wants, whether they're a business owner that's trying to get financing and they're in a business but they don't declare much income, whether they're a real estate investor and they want to be able to expand their portfolio and they don't understand, they don't have the knowledge of the strategies and options that exist. And I want to be the source and the resource of not just the mortgage, but the results that they see from being able to invest in real estate for the future. Because it's not just about today, it's about the future. And their future also dictates somewhat my future, in the sense of I take great pride in seeing the success of others. I've coached basketball. I've been a referee for many years in basketball and helped coach other referees in basketball. And I've always taken great pride in seeing the success of other people exceeding that of which even I have done. And I think that's a big part of why I continue to want to work with real estate investors is, one, they need someone they can trust. Two, as this market of mortgage policies and federal regulation and everything changes, it's becoming more and more difficult. Although the mindset of borrowers is that it shouldn't be. Why is this so difficult? Why do I need to provide bank statements? Why do I need to provide, this, that? And there's some people that really get stuck in that because they don't maybe see the headlines. They don't know what's going on in mortgage fraud, in the world of mortgage fraud and money laundering. And they don't see those things. So they don't understand, well, I don't want to give my bank statements. Well, this is part of federal regulation. Sorry, the bank can't get around that. Doesn't matter. You can go directly to the bank. They still need the
Doesn't
bank
change
statement.
anything. Yeah.
You can go to another mortgage broker. They're still going to need your bank statements. Like, it's unfortunate, but
The
we're in
reality.
a very, I don't want, it's not litigious. It's a very um, risk adverse environment right now when it comes to lending.
So one of the things that, over the years with our trusted partners, we come to really understand with real estate investors, particularly, is it's not transactional, it's relational. At the end of the day, we know that real estate investors have a tendency to do multiple deals over the years, whether that's 2, 3, or 10 or 100, doesn't matter. But that makes it relational, not transactional, and being able to look after them, share in what their goals are and helping them achieve that goal or those goals or that vision. But when you think about what you do versus, again, other mortgage brokers, you talk about people living into opportunity, into their opportunity. I don't remember quite the language you used around your purpose and what you do. Is that the primary difference of what you bring with your clients, or how do you look at it differently than others?
Yeah, that's the probably that's a big part of what motivates me. All people living a life of opportunity is what drives the conversation for me when I talk to someone. I want to know where they are. I want to know any struggles they've had. I want to know what their goals, what their dreams are, whether this is their first home or whether this is their first rental or it's their eighth rental or 20th rental. I want to know what their experience, what their background is, what struggles they've had. A little bit even about mindset, like what's their thought around investing. Like, some people have been investing in real estate, but they feel like it's a constant struggle. And and so it's one of those things that when I get the chance to speak to someone and get to hear their story and listen to their story and pick up the things in there that can be roadblocks for them, and just asking the right questions, sometimes they're a more powerful or deeper question, helps them to realize and recognize that I'm on their side. I'm not here to be a roadblock. I'm here to be a facilitator. I'm on their side. And the more I know, the better I know how to work with them, but the better I also know how to position things, and to present things to them that are going to help them move towards where they want to be going.
Yeah. So when you're working with investors, I'm sure that you've seen and faced some big challenges. What's interesting about real estate investors is that you would think that over time and over years, it gets easier for them to get financing, when in fact, the opposite is quite often the case. It gets more difficult for financing. Is that where your more difficult challenges lie? Is in some of the more experienced investors who are taking on bigger deals, or they're getting a little bit more complicated because they're raising capital or they're having joint venture partners? Is there some, have you got a story or perhaps a challenge that you've faced over the years that you can share, what it was, or maybe how you even got through it, given, and where it was you got through it because of your experience, for example, or your relatedness as an investor yourself?
Yeah, so it's interesting, like right right now, the environment we are in with rental properties and interest rates and policies and stuff is really way different. For people that have been investing for 10 years more, even a little bit, even 5 years, 5 years and more, the lending environment is so different. And so it's changed so much. And some people have, that have maybe continued to buy are not as impacted by some of these changes. Like they've been able to go with the punches, so to speak. But there's others who they don't understand that there's different interest rates for rental properties versus primary homes, and they're searching on the internet and they're going, well, I see this on the internet, and then we have to have that discussion. And so often that the challenge comes around making sure that we're revisiting our initial conversation that we've had around what their objectives and goals were, to make sure we're still on the same page and on the same track. Now, when it comes to looking at the lending, there's product changes and things. And so sometimes we start out with, maybe a pre-approval and an idea of getting a mortgage that's, just a standard mortgage over here. But then the client finds a property that is, has other potential. And we have to look at, okay, well, let's look at what purchase plus improvements programs we have now. And now there's changes in that world. Now, does this work for you to be able to make this possible? And now we have to flip their mindset space and how they were thinking of things. And, well, do I really want to take on a construction project, so to speak, to add a suite or whatever? Do I really want to do that? That I wanted to, I was looking for turnkey, but now you've thrown this at me. I'm not sure. And so I work through those. And so I don't know if that's, and having access to some different lenders that can make sense in certain situations really helps us. I have a client right now, we're refinancing 3 rentals. His debt servicing didn't work at all these other lenders, but take him over to this lender. They've got great rates. They don't have a line of credit. They don't do a readvanceable product. But he's like, I don't care. The rate that I'm going to get, yeah, I'll take that. Let's do that. Let's do that. And so that's how we, have to pivot sometimes. One, with showing what the possibility is, and two, helping them shift their mind around how important is it that would, do you really need a line of credit based on X? We're going to fully fund the first 5 years. Your pay down is going to be minimal. Or do you really need that?
Let me ask you this question, Keith, because right now, back to your point, is that mortgage lending is changed dramatically over the past few years, certainly in the past even 2 or 3 years. We look at accountants who are constantly going back to some kind of course or some kind of school to learn what the CRA is doing and the tax changes and all the things that are happening. And now what we're seeing within the mortgage industry is that you're having to update and upgrade and be really connected to the many changes that the bank is making or that OSFI is suggesting. And each bank is a little bit different. And there's so many things that you have to learn along the way, which is all to say is why those looking for mortgages need to work with somebody who is actually taking the time to learn all those nuances, because that's the difference between getting a mortgage, not getting a mortgage, getting the right mortgage, getting the best deal on a mortgage. I mean, it really has gotten to be quite complex, and anybody taking it on their own and dealing with just one bank, I believe, is just quite naive. As you know, I stand on the soapbox for RAIN Trusted Partners, and of course, as a mortgage broker, an investor-focused mortgage broker, you kind of shine a light on just how much there is to learn. Now, that's a little bit of a long entry into this conversation here. Right now, the headlines are really huge in terms of the affordability challenges that first-time home buyers take on. We've really stepped into what we call the self-funding house initiative. Then some people call it house hacking. But ultimately what it is those who are looking to get a mortgage or buy their first home are priced out of the market, or they can't get a mortgage, or they can't come up with the down payment. And we're a big believer in the self-funding house strategy, whereby you can, in fact, own your own home. You just have to do it different than it's been done in the past. In other words, having an additional dwelling unit, such as a basement suite, such as a alley home or coach home, or something else that generates revenue for that particular property. Now, when I look at the self-funding house strategy, and you're sitting down with somebody who may say, well, I would like to buy a home. I have an opportunity to buy a home or a turnkey, detached, semi-detached, something with a suite, an ADU. How impactful and how effective has that become as a strategy in the world as you're seeing it? And because you're kind of expert right across the country, we don't need to speak necessarily geographically. There are certainly some regions that are more affordable than others. But talk to us a little bit about that self-funding house strategy. Do you see that as an effective strategy, Keith? I mean, coming from you as a mortgage broker, does that make the point of entry for first-time home buyers easier, better? What's your thoughts?
Well, it certainly makes it better. I don't know if I would use the term easier, but it gives them the opportunity. It presents them with the opportunity for an option to consider that could enable them to own a home. Now, we have some programs that have come out recently, like within the last couple months, that help support that. Like the ability for us as mortgage brokers to use rent 100%, up to 100% of rent from a suite that is going to be built under purchase plus improvements after possession, or the legalization of an existing suite under purchase plus improvements that's going to happen after possession. So that product alone has a huge help for in the qualifying amount for mortgage. Now, rents are going to be based on regionally, looking at what it can do, whether it's 1 bedroom, 2 bedroom, that region. So in that aspect, we have to base it on that. But that's a huge help in qualifying. Like
Yeah.
$1,500 a month in rent, that's a couple $100,000 in mortgage. So that's a huge.
Well, but let's just take a minute to break that down a little bit. So first off, let's go back to your one comment where you say not necessarily easier. Well, we do live in the world of, yes, it is simple. It doesn't necessarily mean it's easy. So thank you for clarifying that. Having said that, if I'm buying and want to buy a, let's say, average price home in Canada, and I know Vancouver and Toronto skew the market, GTA, but let's say the average price home in Canada is, I don't know, $650,000. I don't know how accurate I am there, but I won't be too far off. But let's say somebody wants to buy a $650,000 detached home with a ADU that the basement suite or even the main floor. You don't have to live on the main floor. I mean, sometimes people want to, got it. But let's say you're getting an extra $1,800 a month for rent on that mortgage that you're going to, even if you're putting 5% down. So you're kind of basically getting a $600,000, $590,000 mortgage, rough math. I mean, ultimately, with that extra $1,800 a month, that really opens up the door to financing that particular property far more likely than not having that, for example. Am I on the right path?
Yeah, absolutely. Absolutely. And then the other piece that comes into play with this is then they go, well, I have enough down payment to buy a property for 500,000. But I struggle to qualify at that. But yet, if I buy a property that has a secondary suite, an ADU, a garage suite, that price point is 650, and then I can qualify for the mortgage because of the amount of rent. I could qualify for the mortgage, but now I don't have the down payment. Now I only have $25,000 down payment. I need closing costs and another $15,000 in down payment. So best laid plans, I feel like I'm out of the game. Well, this is where then we come into looking at other strategies for down payment.
So
Like,
let me ask you a question, Keith, and I don't want to go off too far off track, but I want to do I got the question in my head, so I'm going to ask it. If I buy a detached home, it doesn't necessarily have an ADU, but I sit down with you as my mortgage broker and I go, here's the deal. My wife and I are going to buy this home. My brother-in-law is going to live with me. He's going to sign a lease that pays $1,500 a month rent to live with us. And it's a 1-year lease, 2-year lease. Does the bank take that as a ADU option or as a leasable option? How does that? I'm just curious as to, is that
only if there's a legal suite.
there has
Only
to
if
be a
there's
legal suite?
has to
Got
be
it.
a legal. There has to be, or if there's an illegal suite, they'll use 50%.
Okay, got
But
it.
if there's a legal suite, they'll use 100%. But
Awesome. And so the
yeah,
bank needs a stamp saying legal suite.
we have to do the legwork to prove legal suite. Like Calgary, there's the registry. Some other cities have the registry.
Yeah.
Other cases, we've got to go through, look up zoning bylaws, and going through that with a client right now, where we've had to pull up zoning maps and zoning bylaws to send them to the lender to prove that his places have they have legal status,
Yes.
because they don't have a registry, right? And so the lenders kind of get stuck. They get spoiled when the city has a registry. They kind of get spoiled because it's easy. They just go and type in an address and they get the information.
Beautiful.
When they don't,
Got
they
it.
don't.
Understood.
So that piece of it is, but then there's B lending. In the B lending world, that situation you mentioned where there's going to be a family member living with, then we have the ability with some of them to use contributory income, which would be a family member living with them that's going to be also paying rent. Then we can use a certain amount. They won't use the full lease, but they'll use a set amount.
Well, I mean, some of this is just really shining a light on the fact that when you work with somebody who has the expertise like yourself, some might call it creative financing, but ultimately the point is that when you're working with an expert and a trusted partner within the real estate investment network who understands these nuances, it opens up the door of opportunity to actually get financing done, whether you're looking at it as an investor or you're a potential first-time home buyer that needs to qualify, if you start treating your home as a business and you look at it as an investment as opposed to a first home or just your first home, it opens up the door of opportunity to sit down with somebody like yourself to actually get the financing you need to own your first home. And that's really what I wanted to shine a light on. So thanks very much for that. Before we totally leave this particular topic around the self-funding house or house hacking or whatever term you happen to want to use, what do individuals do who are short the down payment and or struggling to come up with the down payment to get it going and get that first time home?
Yeah. So some of the things that we often see now, not everybody has an RSP. Not everybody has been able to use a first home savings account. And not everybody has parents that are able to gift them funds. I mean, those are all options. But then when we get outside of that, somebody goes, well, we used the house example of the 500 versus 650. I've got the down payment and closing costs for 500. I'm glad I can qualify for 650 because of the rent from the secondary suite, but I don't have the down payment. So how do I come up with another $15,000?
Great question.
Right? How do I do that? And so that's when we start to look at, okay, what do you have for assets? Oh, you have a vehicle. Okay. How old is your vehicle? Is it 7 years or newer? Okay. Do you owe anything on that vehicle? Is it free? Oh, I bought it for cash, or I've almost got it paid off, or whatever it might be. Oh, well, we actually can get that vehicle refinanced and use the funds from the refinance of the vehicle for down payment. Now we have to use that new payment for the vehicle loan in the debt service, total debt servicing. But if they're not carrying much other debt, that often doesn't play a big factor in impacting how much mortgage they can qualify for. So that's a strategy that we use quite often that people don't realize is even a possibility. Because a lot of people, well, I'll just use my credit card. Well, why would you pay 23 or 28% interest to borrow cash from a credit card, which banks don't like anyways? If you borrow against an asset, the banks are okay with it. Now, the other possibility, if you don't have a car, or you lease a car and you don't have that, is that we have connections with lenders that will do personal loan. Well, maybe a personal loan for that $15,000 is what's going to get you, is going to make this work and get you into that home. So that can be another way to make it happen. And if you're doing the house hacking and you've got that rent, you can take that rent instead of worrying about maybe taking that rent and paying down your mortgage faster. Well, pay off that personal loan first because it's going to be at a higher interest rate, and get rid of that. If you're getting $1,800 a month in rent or $1,500 a month in rent, we'll keep it simple at $15,000. In 10 months, you could have that gone.
Beautiful. So thanks for sharing that insight. That's great. Thanks very much. So Keith, as we start to wind this segment of the show down, I'd like to step into what I would call some rapid fire questions that are probably not going to be that rapid fire, but let's fire them up anyways. So when we look at it, I know that you're often asked, and I know I've been asked over the years, but what is the difference between a independent mortgage broker and a bank or a broker with a bank, whatever the bank might be?
Yeah. So the biggest difference is, as a mortgage broker, I represent the client to multiple different lenders. When you go into the bank, the person that works for the bank represents the bank. They don't represent you as the borrower. They represent the bank. So they're paid by the bank. They're beholden to the bank. That's their role. As a mortgage broker, as much as I have responsibility to present a good deal, well-packaged deal with thorough information, making sure there's no mortgage fraud happening, anything like that, to the lender that we're going to present to. But I'm representing the client and making sure that they have the options and understanding of what those different lender options are that are potential for them. Like the bank sandbox is this big, mine is this big. And that's the biggest difference. And there's no fees for my service when we're working with lenders.
I think that's an important point to make. You're out there to pitch the deal. You're representing the buyer, the borrower, and ultimately you don't get paid unless you find that borrower the money they need to do the deal. So this is something that's really important, I think, for many to understand, is that you represent them. You're there to pitch the best deal for them to the bank, or get the best deal you can from a particular bank. And you shop that and you pitch the deal, and you don't get paid unless you get the money. I mean, that's as simple as that, is it not?
Yeah, it's pretty, yeah, and it's interesting. You bring up just a little quick one, that we shop it. And it's not that we submit the deal to multiple different lenders,
Right.
because they don't like that.
No. But you go, but you find the place
Yeah,
to go that's going to
we
make
do
the
all
most
that
sense.
work ahead of
Yeah.
time. Yeah,
Yeah.
we'll talk to BDMs, we'll talk even to underwriters and go, hey, here's the deal. Especially if we think there's maybe something that's just on the edge of, maybe it's a little bit of a, I don't want to say gray area, but maybe there's a little bit of a, a debt service issue, and we're trying to maybe use a little bit more income, or something,
Sure.
trying to not use an expense because of a situation. So there's different things that are grossing up. Somebody's got some pension or long-term disability, different things that we have to talk to them about. But that's one of the things that a mortgage broker has that the bank doesn't. If the bank says, they've got their policy, we use income A, B, C, D, and that's it. If you don't fit that, we won't do it.
Then you're
Mortgage
done.
broker goes,
Yeah.
what are your sources of income? A, B, C, D. Okay. I've got two or three lenders that I know will consider that. I just have to figure out which one of those three will potentially use all of them or use the best of them.
Understood. Great.
So that's one of the big differences.
So thanks for that clarification. Now, having said all that, it would be, I think, obvious, maybe not, but not all mortgage brokers are the same. What are some of the differences? I look at it as simple as, are you an investor focused mortgage broker? Do you yourself own investment real estate? Versus when you go to a bank, not to make bank mortgage brokers wrong, but they generally don't have the same level of understanding of investment real estate. But you tell us, what is the difference between mortgage brokers? Because they're not really all the same.
No. So a little bit on mortgage broker versus bank in one sense is education. Mortgage broker has to go through specific education, licensing, and carry error and omission insurance. The persons at the bank, the mortgage people at the bank, don't go through that same level of education. So that's one little piece. But then when we look at, mortgage brokers themselves, then we start to look at, well, what do you do to educate yourself ongoing, right? What do are you doing things to stay up to date on the market in different aspects of real estate? Whether you're real estate investor focused or not, what are you doing to stay current with the market? How do you run your operation of being a mortgage broker? How do you have conversations? Is your focus of the conversation just about getting an application filled out and not really finding out more about what challenges or problems the client has had leading up to this moment that they're speaking to you, and what do you need to maybe do differently to help that client that they haven't had to this point, and that's why they're talking to you. So I think that's one of the big differences is the purpose behind the conversation, especially that first conversation with the client. I'm not worried about the application. I'm worried about finding out more information about the client, what makes them tick, so to speak. But where do I fit into their plans now and in the future, so that we can build that picture and build that dream together,
Put a
and
plan
with
together.
investors, create a financial life by design for
Yeah.
investors.
Yeah. So I know one of the things is that you're Smith certified, or Smith Maneuver certified. What do you call that? Expert. But tell us a little bit about the Smith Maneuver.
Yeah. So the Smith maneuver in simplified forms is to be able to create the interest on your primary home mortgage to be tax deductible from your income to reduce your taxation. Now, it's more in depth than that, and each person's situation is unique to them in how that will apply to them and how we set it up and how they implement it. I implemented it myself on our own home starting back in 2005. When Fraser Smith's original book came out in 2002, I think I got it in 2004, and then we implemented it in 2005. And I've carried it on ever since then. And then Robinson Smith came out with the Smith Maneuver certification program in 2020. And so I jumped on that when it came out because I saw the benefit in it. And I believe that it's one of the most underutilized tax advantages that Canadians have. Um, the days of, and the reason that, sorry, I'm going to re-say that, the reason that I believe the Smith maneuver needs to be used more readily and be more informed for Canadians is because the days of homes being 20, 50, 70, $120,000, unless you're maybe in a little tiny town in northern
They're
nowhere,
gone. Those days are gone.
those days are gone. I mean, homes in Iqaluit are $700,000. I mean, so, like those days are gone. And so people don't have the money to be putting into paying a mortgage and putting into investments for their retirement. So understanding how your home can help you both build wealth and create tax deductibility at the same time as you go through those your best earning years is so valuable and important. And working with the right Smith Maneuver certified professionals to help support you along the way is the way it's going to happen. You can't use that term at a bank. They won't even they won't use the term. They can't use the term because they're not allowed to give
certified.
that kind of advice.
Yeah.
They're not certified, but they can't even give that advice. So,
Yeah.
well,
Yeah.
that's why to me the Smith maneuver is such a powerful tool. And then there's the accelerators that go with it. And so those are the
Well,
conversations.
that goes back. I mean,
Clients.
that really goes back to the point that not all mortgage brokers are the same, and this is one of those examples of why they're not the same. So, do you only do mortgages in Alberta? I happen to know you don't, but give us a little bit of insight into that.
Yeah, so I am fortunate that through my brokerage, Enrich Mortgage Group, and through Mortgage Alliance Canada, which we're a franchise of, I have the ability to do mortgages throughout Canada, including Quebec. And I've done mortgages in Halifax, New Brunswick, Iqaluit, even Newfoundland. So, we are able to do mortgages throughout Canada. I've been able to help clients throughout Canada. Now, there are some licensing changes that are happening in different provinces. And so sometimes I have to do things a little differently in some of those provinces based on those licensing pieces, but we're still able to do it.
Beautiful. So, final question for today, and this is probably a common one, and I know it is for investors who want to be investors, but they're stuck. Should somebody be buying their primary home first, or should they be buying a rental?
Well, I'm going to use your favorite answer. That depends. But here's my personal view. If you can buy your first property as a primary home with the vision of that it's going to be something that you would turn into a rental,
Right.
that is the best place to start because of the advantages you get to be able to buy your first primary home, whether including interest rate, down payment, the ability to use rent to help qualify whether you're adding a suite or it has a suite. There's so many advantages. Now, also, not all lenders will lend to someone to buy a rental when they don't own a primary home. So that is a limitation that's out there. And lending to, and I'm seeing this more where it's a single income individual that wants to buy a rental or even buy a primary home. And it's a little bit less than primary home, but certainly on rental, they are not liking a single income person trying to buy a rental. Now, if they've got really good income and they've got some net worth savings behind, they'll look at it differently. But if you're using all of what you've got for savings to put towards your down payment and closing costs on that rental, leaving you with nothing, and you even have a good job, they see you as a high risk for not having backup because they know that the best laid plans on a rental can happen. And a tenant leaves and you've got no rent for a month from that unit, whatever it may be. A fridge goes, a furnace goes, a hot water tank, whatever. A hailstorm hits. God, don't even talk to me about that. But that's the way it goes.
So this goes back to even what we talked about briefly a while ago, which is around the self-funding house strategy. If you look at the self-funding house strategy, that house hack, and you're treating it like a business as an investment, you would in fact own your primary residence, have that ADU with the aspiration of one day moving out of that home into another home, but turning your existing primary piece of real estate into a rental property. And so those kind of things connect the dots. So I appreciate that. So Keith, thanks for your time. Thanks for sharing your insights as one of the Real Estate Investment Network's long time trusted partners. You and I have known each other for many years, and I appreciate what you bring to the REIN community. Thanks for your time today.
Hey, thank you, Patrick. I appreciate the opportunity to be here and just talk about how we make
What's
this
going
happen
on?
and how we got here and how we move forward and how we make things happen.
Beautiful. Thanks, Keith.
Hey, you bet.